Welcome to the Modern CPA Success Show, the podcast dedicated to helping accounting firms stay ahead of the curve. Our mission is to provide you with the latest and greatest insights on cutting-edge tools, innovative marketing strategies, virtual CFO services, and alternative billing methods. Join us as we change the way people think about accounting.
All right, Adam. Well, we were just talking. It's been a while since you and I have podcasted together, so I was glad to be brought onto the show today and talk with our guest Tyson Ray.
Yeah, I mean, good guy. I mean, just different perspective. I think, we kind of live in our financial world, and sometimes I think we forget what we can learn listening to other service professionals. So his unique perspective and how he builds relationships, I think, is really cool, and I think the audience will find valuable. So let's jump in.
Awesome. Sounds good. Hello, everybody. Welcome to today's show. You have a guest host here with Jamie Noss. So, going to try to live up to the big expectations that Tom usually sets for you guys. But I'm excited to be on the show. Excited for today's guest. As always, we have Adam Hale here with us.
Hey, Jamie.
All right, and then our guest today is from Forum Wealth Advisors. His name is Tyson Ray, and he's going to really help us with a lot of different areas when it comes to wealth management. So, welcome to the show, Tyson, and tell us a little bit about yourself.
Thank you for having me on. I think the introduction of myself, I was asked the other day, who am I? I'm like, well, I'm a believer. I'm a husband. I'm a father. I am the CEO and co-founder of Forum Wealth Advisors. And I'm someone who gets out of bed every morning trying to help make life better for our clients and people in our community. And so I'm happy to be on and try and help bring that message to you guys through this podcast.
That's great. I think that where this kind of goes in a lot of for our audience, again, it's a lot of people in industry trying to deliver value to their clients, trying to be more than just the numbers. And so whenever we were talking, Tyson, we thought that the conversation, especially around the total relationship, I know you've kind of coined some terminology around that and some systems, and I think it'd be valuable for the team to really hear, whether or not you're in wealth management or you're on more of the financial side. It's all about bringing it down to kind of layman's terms and how to apply it to people's life and their situation, whether it's on the business side, the personal side. With us, we're typically working with small businesses, so they're kind of one and the same. It's really hard to decouple those, and so really understanding where the owner's coming from and what their needs are is really important in everything that we do. And like I said, I know that you have kind of a unique perspective being on the wealth management side, but I think it definitely is a lot to learn for us on the on the financial business side of things.
Yes, no, I feel more at home in the realm of the business owner and working with the CPAs almost than I do the financial advisor title, which I think is the old salesman stockbroker hiding underneath a different title. I'm trying to purify my industry as much as possible for those that will listen. I think something that also kind of ties me to the impact that you guys are having is after getting doing this for a while, and then I got this the CFP designation, which is kind of your inch deep and your mile wide of all the materials that the CPA exam is. I had been doing this for probably a decade or more, and one of my partners came to me and basically was like, "You're bored, right? And I'm like, yeah, so I decided I wanted to challenge myself. So I went and got a certification in business exit planning. so it's like, because, right, we were dealing with the person that had the sale, or they had monetized their business, or they had saved enough money to become a client that way. And yet there's so many more. I think the vast majority, quite frankly, of businesses that their wealth is their business. And especially if it's family business, that's going to keep going into the family. And so they were never really showing up in the normal financial services world. And their experience with financial advisors, quote unquote, was someone trying to peddle them a product or sell them something, which probably they didn't need. So for the last 5 or 6 years of bringing on and being able to help the business succession planning, that what exit planning is, has just been a great opportunity to use. Part of my degree in college was psychology, because at the end of the day, working through all the dynamics of the emotions and the egos and what are you going to do if you retire and can they really take it over and all that goes into business exit planning is just fascinating. But The Total Relationship is a book that we wrote. We launched that this past summer, and it's the culmination of some processes that and best practices that we've gleaned over the last 25 years. And I realized that um, because the focus is on making life better for the client, it has nothing to do with, it's not a book about portfolio management. It's not a book about, the wealth management, financial services necessarily. It's a book where the rubber meets the road on how to have a relationship with a client and how to communicate and ask questions in such a way that I think the clients are looking for, whether you're a CPA or attorney or a financial advisor. And the book was written to try and help advisors understand the opportunity that they have to step into that I think most miss. Both the CPAs that are so practicing and focusing on what has happened and plugging it into the returns and trying to save taxes in the present and looking in the past. And then the financial advisors are like trying to predict life for the next 30 years and make guesses on what that's going to look like and how to make those plans. And what the Total Relationship really does is call us to focus on often what the client's worried about, which is what in the world are they doing in the next 6 to 12 months, maybe the next year or two, and what really needs to happen financially and what are the opportunity costs, because they can't do everything they want to do often, that goes into that. And so that's part of the 3 parts of the Total Relationship is what we refer to as a life plan, which is putting that focus more on that shorter term time frame, which we can talk about. Then the wealth plan of how their portfolio or how their business or how their finances pay for or need to be saved for this plan in the short term that they want to accomplish. And then the care plan is how the advisor can come along and advocate and help them sell the business, take the vacation, buy the car, give the money away, reward themselves because they work so hard. And so it's been a joy to kind of put together. In our industry, they're coming out with all this legislation about trying to make put the client's best interest first. And what we think the Total Relationship, and it wasn't written for this purpose, but what the feedback I'm getting is this becomes almost the how-to guide to do that. And a lot of it is just the questions to ask and the things to focus on that we've been finding for 25 years. This is what they're all like. These are the answers that they have inside themselves that we get to flush out and then help them prioritize. And therefore, then the tax return isn't a surprise. Therefore, their life that they want to live isn't a regret in the future. And the depth of it, it's all about, again, being a part of that family or a part of that business, a part of that partnership that advisor client relationship gets to be, and how we get to go about being affecting that, which is just a privilege, right?
Yeah,
So
that's where I see really the parallels in what we do and what you do in terms of, everybody wants to know, like, you get so caught up in the things that you do every single day to deliver, your deliverables to the client, that those little side conversations that you're talking about where you're asking about what to do in life and all this other kind of stuff, and you're talking about their car, they almost just seem like they're byproducts because you're too busy like shoving down the product that you just spent 3 hours putting together, and you want to like talk about it and show it all off. They don't really care. At the end of the day, they just want to know, okay, based on that, I want to know, can I buy the car? Can I do this?
yeah.
Can I do that? And it's like, I don't know, it just doesn't seem like we leave space to prioritize those things, and we don't set the conversation up oftentimes because, again, we spend a ton of time figuring out how to do this stuff, and we, in education and in practice for the meeting, and then we lose sight of really just being that guide. Because I think that's another important call out that I heard you say, and we preach all the time. The client knows the answer. You know what I mean? Like, let them talk, let them do their thing. You're there to have an opinion, number one, and ask questions. Ask tough questions, ask smart questions, just get the process going. And then once that starts happening, you can kind of collaborate with them and help guide them through that journey. And so that's the part that it's harder to teach, because it's not like, now don't get me wrong, there's rumbler questions, right? And so I know that you have some tactics there in order to, and some processes to kind of hopefully standardize that to some degree to make sure that every client's kind of getting a similar relationship. And then after that, it's all kind of, dealer's choice, I would assume at that point, because the client's going to take in a few different directions. So if you don't mind, I mean, I would love to hear more about each one of those segments and then how they kind
Sure.
of intersect.
Yeah. So if we'll start with the life plan. Nothing to take away from financial planning, and nothing to take away from the Monte Carlos, and nothing to take away from projecting, what do we need to accomplish in the next 30 years and what rate of returns are possible. And in fact, the life plan we find starts, and the other part of the life plan is where every client is unique and has unique experiences and unique desires. There's a lot of categories that are that at a high level everyone has to deal with. And so for us, it starts with and it ties a little bit back to the name of the firm, right? Form, because we often get is it form or is it FORM? And it's kind of both, because the F in form actually stands for family. And so whether you're coming to us and you're new or you're an existing client, before we talk about the tax return or before we talk about the planning point or we talk about whatever it is that's on the agenda, it is, hey, how's mom and dad doing? Reason why is because I've had enough time in 25 years that when I stumble into a meeting and I want to start this process thinking I'm supposed to talk about a pie chart or a graph or some return or some projection, but mom just got diagnosed with stage 4 cancer, like they're not there. Like that's the most important thing to them in that moment. Or we got to move mom into a care facility out of the family home, or we lost dad, or we're worried about both of them. And so when we're coming in, we're asking, how's mom and dad? And we may find out dad's no longer with us. We'll ask, when did dad die? How old was he? We actually we've built technology, our CRM, to take in some of this data. And the reason being is, if the client's 65 and dad died at 55, does that affect, the question is, does that affect how long you think you're going to live? Because I'm going to go Monte Carlo project you live to 100, but you think every day's a gift. Right. And so just these families, everyone has parents. They may be estranged, they may not be alive, but they can give us information to help advise better psychological things that people process when it comes to your parents. And then, do we have any kids? Do we have loved ones we're leaving stuff to? How are they doing? You want to come into the first 5 minutes of any relationship with anybody, making sure their parents are okay if they're still with us, or empathizing where they're at in the care for their parents as this baby boomer generation ages and there's millions of people that are going to step through the gates of this transition of life. After that, and quite frankly, maybe they want to talk about the kids, but if they have grandkids, oh my gosh, graduate high school or they're going to a soccer game or where they went to college, like it just brings, it's like sitting at the family kitchen table for 5 minutes and it just takes it's like it's no longer a business environment. We're connecting. So it's just a little
replacing
bit of
the weather. So
What's
you're replacing the weather conversation with family conversation, because that's usually the start of every meeting.
It's not
right?
who won the football game, right? It's
Yeah,
not the sports analogies. It's not what, did you try the IPA? It's none of that. And the reason being is, in this information age and the social media age, relationships are dying off. They're not what they once were, for sure. And just by asking a few questions that gets right to the heart of what really matters at the end, sets the table for the rest of the meeting. Especially, it lets me know at the deepest levels what really drives hearts, our family, where they're coming to me with. It also, and it was never really intended this way, but it also just opens up the floodgates to the referrals of helping mom and dad if they're not clients, or helping the kids as they go through life events or need help, whether they become a client or not, or just speaking into the situation. But so the F in form stands for family. In the CRM, we'll be tracking parents, client, kids. Right. Go ahead.
Yeah, I was gonna say before we get into I think you're moving on to the next one. So I want to talk a little bit about the life plan a little bit more, because it sounds to me like, I was looking at your notes here and I was looking at kind of the plans you have laid out, and I'm like, it makes sense to me that life plan is listed first, and it sounds similar to something we do in that first meeting, which is what we call our back of the napkin meeting. We're really trying to learn as much about the business and the business owners and their goals first, so that we can be better advisors. And that sounds very similar to what you're doing with this life plan conversation, where you're asking a lot of background questions, you're asking a lot of things that are going to help you you be a better advisor. Am I on the right track there?
Yeah, but we blend them together. So that life plan is including family. We'll actually ask about the pets because some clients care more about their pets than they care about their kids. We'll ask them also about their health. And after we jump to that, then we start getting into the life plan, which is, hey, travel and recreations is things people will sacrifice money for to go do to just give themselves a break. And so we're like literally finding out in the next 6 months, where are you going?
Mm-hmm.
Are you even taking a trip? I have some clients, it's like, do I have permission every year to bug you that you told me in an ideal world, if you got to $1 million of revenue, you take a 2-week vacation, but you're at $2 million of revenue and you never took the vacation because your life is the business. So family, travel, recreation. Let's talk about the house. Are we living in it for forever? Are there home improvements you want to do? And you've been saying you want to remodel the bathroom, and we set aside the $50,000 to the remodel, but like the life plan is designed to find out what is it that they want to do, that they're afraid to spend the money to do it. One of my favorite things to say to clients is like, if you want to be I just said it at 9:00 an hour ago. I just said it to the clients who are sitting there. I'm like, guys, you are continually being afraid of running out of money, and you're stressed out, and you're a multimillionaire. And you can do these things. And here, the money's sitting in the bank account. We set it aside. Now you just got to go hire the contractor and go pull the plug on it and go on vacation while they're building it out. But so home improvements, these are big ticket items that people can make financial mistakes at some kinds if they haven't figured out where the funds are coming from, or it's to give them rewards for the labors of the business. And so it's different from, I don't want to say everybody, but a lot of businesses have their business plan. And we need to understand what that is. But it's to try and help them realize, how do you bring some of those resources and benefits from that business back into the life to make your life better, to enjoy the fruit of your labor. And what's crazy is we're basically asking all the questions of why we should send money to them or where money should come from, when it's counterintuitive, because as a financial advisor, I'm paid a percentage of the assets we bring in here. You'd think my job is to try and tell them to give me money and not do some of these things, and it's the reverse. But the life plan is talking about family, talking about travel, recreation, talking about their home, talking about automobiles or major purchases, or if you could, what would that list be? And years ago, the Hollywood did the movie The Bucket List, right? And with an unlimited budget, and one of the guys was filthy rich, they only had a one page of things to do. And when I've actually asked clients, like, if you could do anything, what is it? I have very rarely clients can come up with more than 5 to 10 things. And just knowing what those things are helps then when we move into the business or the strategy of how to take things in the future or sell them or grow, it reminds them why we're doing some of this. Because what I found is, without defining that life plan, that's their life plan. But everybody has parents, everybody has health concerns, everybody has travel or some recreation hobby that they may or may not want to spend time doing. Everybody has a home. Maybe they have two, maybe they want to do something different. Driving a vehicle, replacing that vehicle. These are all opportunities for us to reward ourselves, that for whatever reason, I found more often we're, as advisors in the permission business, that the client wants to be told, yes, you can. And quite frankly, you should, because they spend their whole life saving, thinking I need it for later, and not realizing at some point in life, later shows up. And so that is a snippet of what the life plan looks like, where it's different than the financial plan that goes out for 30 years. It's not, you want to buy a car every 5 years. It's, are we buying a car this year? Which car are you buying? Which make and model? Are you going to trade the other one in? When are we going to do it? Which dealership? How are we funding that? And the reason why on the financial side of things is that early in my career, someone invested the $100,000 in the market. The market went down. The client called me and bought the $60,000 car and said, I need the $60,000 for my $100,000 investment. I'm like, wait a second, this is supposed to be for forever. But then I never asked when they were buying their next car. And had I known to ask that question, they would have told me, well, I buy them every 2 or 3 years. And in about a year and a half, I'm going to buy one. And so it's realizing we can ask forward-looking questions. So as the advisors, we don't need to be surprised. And the greater joy to me is not growing my practice from a revenue standpoint. It's how many clients I can convince to take the vacation that they would never taken, make that gift to the charity that they always wanted to do with the extra, or buy that car or do that home improvement and enjoy what this money affords them to do. And that's what the life plan part is of the total relationship.
Elevate your firm with a virtual CFO playbook, how to land $60,000 per year clients and provide a killer client experience. This comprehensive online series of modules provides you with the essential tools to create and deliver scalable VCFO services. Developed from Summit's successful approach, which propelled them from $500,000 to over $10 million in revenue in 10 years. This playbook will equip you with the skills to take your firm to the next level. Additionally, upon completion, you can receive 24 hours of CPE credit for the course. Ready to grow your firm? Enroll now at vcfoplaybook.summitcpa.net.
Yeah, I think as a wealth advisor, obviously you have a little bit more ability, maybe to a little bit more permission to like get into some of that stuff. So on the financial side, sometimes we have to like kind of slowly, build that trust, and like, why do you want to know about this, or why do you want to, I'm here to talk about that. So we try to set the tone pretty early, like Jamie was saying, like in that back of the napkin meeting, and just point blank asking them, what's the motivation? Why are you doing this? Where do you want to be? What do you want to get out of it? And then sometimes people don't know. So then we will throw that question out there, not unlimited money, but, and maybe this isn't a big enough number now, but used to say, hey, what if I gave you $10 million today? What would you do? And so what we hear is both personal and business things. Oh, I would start, one, I'd retire, I'm done. Like, that's all I need. I'm good. Other things are like, hey, I'd set up this new division that I've been wanting to do, or, all these different other kind of things. So those are kind of our, Kickstarter questions, I guess, if you will, to try to open up those conversations and get permission to be able to, step into that personal arena in addition, and really just explaining to them that the business is just an extension of them personally. And that's the reason why we're asking those questions. So I that's why I say, like, again, us intersecting. And then whenever we do work with wealth advisors in that front, a lot of times what we're doing is we'd meet with you, Tyson, and we'd say, hey, I can give you a little bit of background information so that you're kind of on the same page. Like, hey, they hate their kids. Don't talk to them about charitable contributions, not their thing. Like, these are real conversations I've had. Like, don't bring up dad. You know what I mean? Like, those kind of things. And so having those kind of personal relationships and connections with our clients definitely make us stronger advisors and make us better partners for, bringing in a wealth advisor partner, so the client does feel a more holistic relationship. So I think that's that life plan's really cool. How does that then correlate and then move into the wealth plan then?
Yeah. So one thought with what you just shared is, and it's not a pushback. It's just let me encourage you. There you go. The boundaries that we as advisors set, we set. Because if you sat down with a client and said, if we're going to work together, I need to be given trust, because it has to be freely given. That has to be earned. It has to be, to keep it, you have to earn it. Right. But it's that
Yep.
I want to be able to ask you anything about any of these topics to help me do the job I need to do for you. But how the life plan backs into the wealth plan, which is the first and foremost, is identify what so many people make mistakes with cash, either having too much of it, or more often than not enough of it. And so part of the wealth plan is identifying what cash, we literally track what cash balances they said they wanted to keep in what accounts that are not part of the investment portfolio. Because what we found is, and I think also clients make irrational decisions when their fears go up or anxieties go up. And it's as simple as, if they wanted $50,000 in the bank and that got spent down for whatever reason, that the lower that bank balance goes, the more they get anxious about things. They may have millions somewhere else, but for whatever reason, the psychology of my bank account needs to have cash in it. And if it doesn't, I'm going to freak out. That we just, and I think you could do it on the accounting front. I think attorneys, it's just kind of just literally, hey, are we still with the $50,000 in the bank? Because if it's not, that's the biggest problem to solve before you talk about anything else, because you're not solving where their fear lies. So usually it's a checkbook balance, some type of emergency fund balance, and then the life plan's helping us identify what is it in the next 12 to 24 months that shouldn't be invested in the markets. Because the problem with most financial advisors malpractice, in my opinion, is they try and wrap all of that into some custom portfolio, especially if the cash component's in there, but that portfolio fluctuates in value and the clients panic.
Right.
On the business side of things, when you get into your accounts receivable and your lines of credit and all that other stuff, what's outside of the business to live life off of is as important as what these balances are. And the wealth plan on that side, on the business side of things, and I've been screaming this for a couple of years now, is do you pay it let's chart out how is our debt rolling over? Because in the financial crisis, the difference between Ford and GM is Ford rolled over their debt the year before the financial crisis happened. GM was rolling over the year it happened. All the banks said, we're not renewing any of this, and the government needed to step in. And the small businesses that got pinched were all the ones that had to refinance. Their line of credit rolled over, or the term on the mortgage renewed, and they had to go refinance it. And the bank's like, I'm not doing it. And with that really low rates we all had for years in these businesses, paying attention in the next couple of years of how those tranches roll over and thinking about, hey, if we're in a scenario again where it's tight and credit and what have you, what's the plan? Or do we want to we might lose our 3% and go up 4 or 5, but we might kick that out 5, 10 more years. Paying attention to that is part of the proactive nature of that wealth plan, that in the day-to-day grind of the business, it's like they're not looking necessarily out at that. They know it's there, the line of credit's there, what's the balance and tapped and rates or whatever, but the terms of that shouldn't be surprising business owners, and a lot of people were surprised in that financial crisis. So all that being said about the life plan, when it comes to business owners, we take our preferences, we take the spouses, the husband and wife, through it together. And part of the reason why is one of the struggles or one of the questions to ask this business in a business owner setting. And it's one of our cards that we have that they help prioritize what's important. One of them is business succession. And the question we ask is, are you exiting how are you exiting your business? Is it death, or are you turning it over to somebody before you die? And they kind of look at me kind of funny because they don't you're exiting your business. You're either dying with it or you're going to transition it in your lifetime, but you are not, this isn't forever. And many want to keep it forever because that's their world and they don't want to let it go. And that's great. And an entrepreneur never wants to not have a business, right? I mean, the hardest people to deal with are the entrepreneur that sold their business and they go and stir crazy. However, the spouse is over there with a deer in headlights and frustrated or upset because they want to keep working, but they want all these dreams and hopes. And part of the role is to kind of blend those things together. But knowing or helping the couple realize, no, we're going to keep it forever. We're transitioning the kids to the estate, or we're going to, that there's not a desire to sell, but then what's the contingency plan if you die? And that's a whole planning in and of itself, is what makes the life plan unique for business owners. Hard stop. You were asking about the taxes, so I'm going to pick that back up if that's okay. I think your people can cut and paste and figure that out, or leave it out, one or the other. I'm not when it comes to the tax returns, part of the benefit of the total relationship is when the focus is on the best interest of the clients. A client benefits so greatly if the financial advisor, the CPA, and the law firm can collaborate. Like they somehow, and I don't think the clients mean to do this, but like they'll go see the CPA and get one piece of something, then they go to the attorney, and then they come, and it's like I take down and ask for the information. And I say, is it okay if I contact? Because if you can allow those three professions to collaborate, you are going to get better advice. It's going to go smoother because you're not conflicting each other, especially if we're all reading off the same sheet of music. The ways I've helped identify, so when it comes to the P&L of the business, I can think of a scenario where the client said they have a $120,000 salary. Wonderful. I'd ask for the P&Ls and I just review them. And a year or so went by, and all of a sudden they needed to take $300,000 out of a portfolio and put it in the business. And they had a client that basically defaulted, and they were waiting on bankruptcy or what have you, and it hiccuped their P&L. And they continued to go on and pay themselves a salary. And after 2 years of looking at the P&L, I said, wait a second. I said, you're paying yourselves a salary of the money you put in the business. And they never realized that they were with that loss of revenue threw their cash flows off, and they were paying taxes on a salary that they're taking out in the business that basically was taking money that they put in as a loan. It was just like, and again, it was just an opportunity that there are things an advisor sees that the CPA doesn't necessarily see in the numbers. The CPA saw the injection of the money, and the CPA was seeing the revenues maybe decreasing, but they weren't picking up on, wait a minute, no, you're eating your own money. And we had to go back and kind of fix that on the tax side of things. But the collaboration, and I think that's again where I think very much the wealth management financial advisor role is more future focused, longer term focused. I think the CPA, a lot of the taxes is the now and what's the quarter of the year plan to try and maximize taxes and strategy. But where those two can come together, I think the clients benefit greatly.
Yeah, no, I mean, we definitely agree, and that's honestly probably what we're focused on a lot of the times. Is we think a lot of accountants are too focused on the past, and so I think that relationship and having that triangle of people getting together and making sure we're giving the same advice or at least similar advice, or sometimes even having the client listen to three professionals have different opinions on something will help them make the right decision. So I think that's a great point. And so I want to make sure we get to the last part of it. So we've talked life, we've talked wealth. I want to make sure we get through the care part of it. So can you kind of go into, now you understand what their short-term life goals are, you understand what the wealth looks like. Now, how do you help them care for their financial future?
Yeah, part of it is just reminding them what they said, right? Or protecting their future self from their present. A lot of that has to do with doing service that's outside of the event, meaning we create in our CRMs the opportunity to contact clients more frequently than waiting to either do the tax return or do an annual review. Part of that care is to figure out what are controllables that people shouldn't be surprised about. A great example is last year, after some of the things that we did in the portfolio, because we on the wealth side, we manage these accounts on a discretionary level, is in the process of looking in the fourth quarter of doing something to the portfolio of harvesting some profits. We also paid attention at the account level of what the taxable capital gains were. And depending on the client's income situation, raised 10 to 20% of depending on the client, of the cash, and then sent them an email saying, can we send this to your CPA so everyone knows ahead of time before the fourth quarter, it may be more tax advantage to you to pay it in the fourth quarter than be surprised in April of next year when you get around doing the tax return. And that's again, where just, these are knowns. The wealth side knows what every statement produces, dividends and capital gains. And I think there's a responsibility and a value add that the financial advisors can bring, or the client should have the expectation of the advisor to bring to the CPAs, or at least to them. I'm not going to count on you knowing that on page 23, the capital gain report is there because you're just looking at the first page to go up or down. But to communicate, hey, this is what the taxable event is. There something we want to do with this, or does this cause the CPA to want to do something? In addition to that, it's caring about, and in fact, this was something else I had said recently to a business owner, is I think sometimes the CPAs get too focused on the tax deduction to buy a depreciating asset. Then you know what? Pay the 30% in taxes. If you've got $1 and you pay 30% in the taxes and you got 70 cents left over, if that 70 cents gives you peace of mind to stick in something that doesn't depreciate, and you don't have to store it, you don't have to buy it, you don't have to use it, you don't have to find an employee to run it. Like, at some point, do you have enough stuff? Or if if your business is reaching the point, and a lot of these businesses are struggling with the ability to find good workers, that maybe reinvesting that isn't going to bring you as much joy as reinvesting it back on your other side of your portfolio and getting money out of the business. Because I think, again, a lot of those deductions stay in the business, but then it prevents some of that wealth to get transferred out of the business. Is part of just caring and offer. I think advisors' job is to do nothing but bring options to clients to consider within the realm of things that they said were kind of important. So I don't think it's not just toss tons of options at them, but just ask them, is it better to buy a third truck that you don't need, or is it better to maybe keep the $70,000 and reinvest it over here, or allow that to be used in something that's not business related, which puts less stress on you having to sell your business down the road if you balance that better.
Those are
caring
key
is just
points.
the value add. What's that?
No, I was just affirming what you were saying. I mean, we're always telling people never spend $1 to save a quarter, and so those are hard conversations, and it's just But the thing is like that pressure comes from the client a lot of times. They come to the tax professional and they're like, "Well, my cousin Bobby was at a bar and he heard that his uncle could do this," and so you're always fighting these things, and it's like, okay, there's not a ton of just random tax deductions. So trying to like educate people on it's more of like structure and planning and opportunity, those kind of things. And frankly, if you want to save a bunch of money, you got to put it away or you got to spend it. So you got to decide which one you want to be able to do there. And so those conversations, yeah, we get prodded a lot. And so making sure that you're advocating to the client that, yeah, and just calling them on stuff that they don't need. And I always tell clients every time they'd say, I'm going to buy a piece of machinery, I'm going to buy a car, I'm like, do you need it? Is it going to make us more money? I mean, if it's not, let's not do it. You know what I mean? Let's save the money. Let's put it in the bank. Let's invest it. Let's do other things. Like you said, personal wealth building, because the more financially secure our business owners are personally, the less pressure we have on the business, not only in the future, but in the present in terms of, just less stressors for sure.
Yep. Yep. Yeah, we struggle with that one too, with the whole Roth tax free. Or especially the new Roth 401k tax free is I keep reminding, or my take on this is the Roth was created in the Clinton administration when they're trying to find a new revenue source to basically get to a balanced budget. So here we'll take all this money that we won't tax for years, tax it now all at once, spread it out over the 5-year budget window. And that made a ton of sense when you could spread it out, but now you get hit all at once, or you're in the highest tax bracket and you're probably always going to be in the highest tax bracket. So now you're going to not take the deduction because it's going to be tax free. And then I'm like, well, if we're in the debt that we're in the future, muni tax income comes back in an AMT. There's nothing to stop them down the road to be like, well, if you make this much money, the Roth doesn't come back in some alternative tax, whatever. It's just like, sometimes take the deductions you can take, but my other analogy with that is if the market is held constant. So if I lose 30% of the same amount of money and they can be invested the same, if you lose 30% from the day you start with the same amount of money, it never catches back up. The only hope is you'll pay less taxes on the back end of it. And it's just like, and now that they did the whole 10-year that it can't sit there for forever, it just doesn't have the power anymore. But we struggle. Man, clients come in, I want tax free. It's like, okay, we got to pay taxes.
Exactly. Yeah. That's what I say. Pay me now or pay me later. I mean, that's just the way it works. So,
yeah.
And that's always, those are hard conversations to navigate. So on the care plan, how can you talk to us, how frequently are you engaging with the client? And, do you have like a standard cadence for those kind of things where you're revisiting, the life plan and all those kind of things? And what does that look like?
Yeah. So let me tell you how I've done it wrong and how we got to where we are. I did it wrong because the world said, well, the bigger the accounts or the more money they have, the more frequently you should be contacting them. Or your biggest clients should get the greatest service. And what I found is that clients go in and out of service needs. And if I kept servicing clients that didn't need the time, I wasn't having the time to service the clients that needed the time. And so 2 things. First and foremost, it's amazing. If you ask a client, they'll give you the answer, which is, how often do you want to meet? Now, most of the time they'll ask me, well, how often do you want to meet? And again, the closer a client gets to retirement, or the closer a client gets to a business sale, if they're exiting their business, the frequency increases on the way into that event, and the frequency decreases over 6 months to a year on the back end of that event. Because what I find is people get into a rhythm of life. And a lot of times people can tell you, unless you lose your job or the business goes under, it's like the expectations for the next 10 years, we're going to be doing these things. And in the first year or so of a relationship, we'll probably at a minimum will want to talk to that client on a quarterly basis. But when we start identifying we're in a rhythm of life, which usually is the meeting is taking less and less time, then we'll go to the client and say, hey, instead of every 3 months, can we go every 4? After 6 months to a year, we might go to the client and say, hey, can we go twice a year? We usually will try and meet with people at the minimum twice a year, a full-fledged annual review, and then 6 months check-in with a phone call. And that check-in will then identify, do we need to turn back on a more frequent service system because something's bubbling up. And then the other part of it is we tell them, if you're not hearing from us, it's because nothing's wrong on our end, and we're assuming nothing's wrong on your end. If we don't hear from you, it's the same. And so we can go 6 months, and we're telling them this, so they're not surprised. But and like a dentist, we're telling them, okay, we're going to meet again in October, right? So it's like it's kind of planned. But we're telling them, life events happen, death, birth, something happened to the business. You're just concerned, whatever. Let us know, and we'll pick it back up. But I think for many years of my career, I was over servicing clients that didn't need the service, not paying attention to the clients that did. And again, I've had some clients, nope, I want to talk to you every month. Okay. And I remember this like yesterday when that happened, after I decided to make this switch. And we had our annual review, and the next month he wanted to come in. He came in, we sat down, and he looked at me, and I looked at him. I'm like, what do you want to meet about? He's like, what do you mean? I said, well, you wanted to meet every month. I only need to meet with you. We had talked about every 3 months. So this is your meeting. What do you want? And we went through whatever question he had. The second month he came in, I said, okay, what do you want to talk about? He's like, maybe we don't need to meet every month. Because it was his desire to meet every month, but we didn't have, if nothing changed, there wasn't a need to do that. And once he realized that, he backed off of it. But his other advisor every month would pull out charts and show him spreadsheets, and this is what happened, and this is their guess of the future. And it's just like, this is for the rest of your life. We don't need to do this every month. And quite frankly, I think the more you do it every month, the more you get caught up in stuff you shouldn't be caught up in.
So Tyson, I think the point you made was really good about talking to the clients about when to schedule. I think that's something that we don't do often enough, and we just assume that a client wants a certain schedule. So going back and asking them, I think is really important. So I thought that was a great piece of advice for all of our listeners. Don't be afraid to ask the question, because I think the answer they give you might be different than what you expect, and it'll help you establish those expectations. So with that, I know we're getting right to the edge of time here, so I want to make sure we have a chance for both of you guys to give your final thoughts. I thought there was a lot of good conversation here, a lot to unpack. So I want to give both of you a chance, and I'm going to start with you, Tyson, and then also if you want to give the listeners how they can get hold of you, how they should reach out to you, that'd be great in this section as well.
Sure. So the easiest way to get hold of me in this day and age is through that LinkedIn software. Or our formwealth.com website. As far as the book, the Total Relationship book is on Amazon. The audio book, for all of you that like the audio version, we made it all of like 99 cents. So it's not about, we want to get information out there. This isn't about selling a bunch of books to make a bunch of money. It's about trying to change the conversation. And we wrote it from the advisor and the client standpoint. So we've gotten feedbacks from both sides of the house that about the application thereof. And I think the takeaway I would like to, I think for the business owners or for those that are clients of advisors, expect more. I think, if you're not getting some of what we talked about out of this relationship, go find someone that's providing it. And if you're an advisor listening to this, realize that there's a whole level of a relationship that can deepen that level of trust and probably allow you to have I think it's almost a better energy, right? The work all of a sudden feels more fulfilling when you're connecting at a level where you really care, right? The heart, like it's a heart, like you're a person and I want to make a difference, and not just about money and portfolio. All that stuff matters. But I think technology has allowed us to get into the groove that we're just plugging numbers and asking questions and then just kind of missing the opportunity to have that relationship. That it's crazy that all of a sudden a relationship is a unique value add. It should have always been that way.
Great. I think definitely that's something our listeners will take away from this. And I think that's really important is it's not always just about the product you're delivering. It's also about developing those relationships. So the product you're delivering makes sense and is believable, and that you're coming at it from the right point of view. So Adam, final thoughts from you?
Yeah, I mean, I think the big thing is just the parallels between what we do on the financial side of things on the VCFO and what you can learn from just listening to people in other industries that are also, I mean, everybody's on that search to find value, and and I think that these conversations are super valuable. And it's great to hear from other service professionals kind of living and seeing their perspectives. We've done it whenever we worked with agencies. It kind of shaped the way we deliver our work and the way we operate internally. And I think likewise, talking to people like Tyson gives us good insight into people that are, maybe coming from a different direction, but you can learn a lot from them.
Well, I think the other thing that I want to just like kudos to you guys is this relationship it's great face to face, but it doesn't have to be. And this opportunity after COVID basically made everybody go virtual. The opportunity to bridge this relationship over video or virtually has cracked open the markets. There are no demographics anymore that are beyond your reach. And because I think a lot of it clientele are missing the opportunity to have that type of relationship that they don't get face to face, they'll accept it virtually because they'll get it wherever they can get it.
Yeah, great point.
Definitely. Great. Well, thanks for all the time today. Like I said, I think our listeners are definitely going to benefit from listening to this episode. So thanks to both of you guys for all the great insights.
Appreciate you having me on, guys.
Thanks.
Enjoy this podcast? Visit our website, summitcpa.net, to get more tips and strategy for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.